Boo-boo, what happened to the power? We gotta go to the backup method. Please, my son. I have to get out of this trade. I'm counting on you. We're almost there. All right, I'm out of the trade. Good job, boo-boo. Good job, boo-boo. This is the only way I'm gonna get out of GME. You gotta do the most. Or you can just not trade it. Nah, we're trying to get millions. Hey guys, welcome back to the After Hours. I'm the A-Tail Beast, and today we're gonna talk about GME. Now, if we just look at this month, it was kind of crazy. We had a big spike inside of GME. We understand it's the stock market. Spikes can happen anytime. They're usually on a cycle, and that cycle is based off of the business cycle. When we look at these cycles, you have to understand, there is natural trading price actions. I'm talking about stock goes up, it goes down. It's all about supply and demand, as well as a little bit of marketing for that specific brand. But this logic is completely thrown out of the window when it comes to these meme stocks, because meme stocks, they are a movement. I'm not talking about this movement. We're talking about it's a movement that goes into the court system, a movement that goes into the normal financial systems, the movement to fight about transparency as well as fair practice. We're talking about those people that are going way back into their history and they're seeing patterns are repeating. Government is trying to force out the people, or they're trying to silence the people, or they're trying to hide a lot of the secrets. Well, this is a movement where the people are trying to fight back against not only regulations, but also criminal activity. During every 5 years, there's usually something going on. Some group somewhere decides that they want to represent this cause, and then out of that group, there tends to be one person that represent that cause. They are the values for that cause. They hold all the values in their principles, and then they push it forward. It all started with GME and one other person. A lot of people know him as Roaring Kitty on Twitter. If you really want to know what happened in Keith Gill's story, there's actually movies out there that already talk about it. There's one called Dumb Money. When we talk about GME, we have to understand that that's GameStop. GameStop is a retail trading company. It's been around for a while. When the internet improved, GameStop became obsolete with new management like Ryan Cohen. A lot of people started to pay attention. They wanted this man to succeed, and they wanted to help out any way they could. And Roaring Kitty was one of those people that truly saw the value inside of GME. He gave a disclaimer saying that he wasn't a financial advisor, and he gave a good thesis, a thesis that was so well written that a lot of people supported this man. Retail, they caught wind of the shorts on GME, and they're not having it. So Roaring Kitty went online. He posted on his Twitter and posted on his YouTube channel. And when he gave his thesis using fundamental analysis and technical analysis, a lot of people liked the idea. He also seemed very passionate, like a likable guy. And he talked about how the price is going to increase. In the next 2 years, you saw the stock go from $20 all the way up to $480. Why does the stock price increase? Well, there's organic price action where you have supply and demand. If there's a weak or little supply, usually there's a high demand. If there's oversupply and there's waste and inefficiency inside of the process, the demand's gonna go down. When you have a third party or when you're outsourcing information about a company, a lot of people tend to trust that third source. It happens all the time inside of the news. Everyone looks at what happens on the news and they believe that it's 100% true. They get behind that idea. They throw money at that idea. It happens all the time, especially with the hedge funds. They're known for manipulating the market. That's why the SEC has to regulate them, because if they manipulate too many people, they're gonna cause a stock market crash, which is why the SEC has the ability to halt the stock to protect you from losing your money.
Interested in trading like Steven Ducks? It all starts with choosing the right broker. Ducks Trading has partnered with Centerpoint Securities to supercharge your trading journey. By joining Centerpoint Securities through Ducks Trading, you can unlock CP Edge, a suite of top-tier trading tools valued at over $6,000 right at your fingertips. Gain an edge in your trading with real-time scanners, cutting-edge news, and a personalized trading journal. Experience trading like never before, with superior short inventory, dedicated support, buttery smooth trade execution, and the opportunity to earn interest on any of your idle funds. Plus, enjoy competitive pricing that suits your trading style. Ready to elevate your trading? Simply click the link in the description below to get started. Now, let's dive back into the content.
We have to understand, when you trade on the public markets, you have access to public information. Well, Roaring Kitty used that public information and he came up with his own thesis. And he said GME is undervalued. And I think because of this technical analysis and this fundamental analysis and his background inside of doing finance, he wants to invest $50,000. And he pretty much called it a YOLO. The enemy of the people were the short sellers. Now, when we talk about the short sellers, we have to understand, we're talking about the big players and the hedge funds. Shorting is a natural option that you have in trading. But if you have a lot of money, you make it really hard for the stock price to go up and generate more supply. And that's really hard when you have huge hedge funds that are shorting a already dying company. And so what happened is, all the retail, hundreds of thousands of people gradually came into GameStop and they tried to squeeze these hedge funds. And at the end of the day, they did. And rinse and repeat. This happened 2 or 3 times. Every squeeze, the hedge funds lost $1 billion. So at the end of the day, when we look at how this works, short sellers, they push a stock price down and they do this naturally. There should be 10 to 20% of the float saved for shorts. Well, in this case, most of the float was saved for the short. Where did this extra shorting power come from? Well, there's an illegal practice out there called naked short selling, where you have hedge funds or anyone that has access to it. They short more than they have. That's what happened on GME. There was a huge short position that was not regulated, and this led to a huge short squeeze. We're talking about the mother of all short squeezes. They called it MOAS. We're talking about mother of all short squeezes. Yeah, this week we didn't have a whole lot going on. What I can say is we had MLGO. Now this was over 500% move. Now it turned into 1,000% move and a lot of people got stocked out. It's all been a dead market so far. Micro floats and biotechs. Too volatile, and sometimes even Chinese stocks. They're just too much to control. And so a lot of people actually lost money this week because they'll be squeezed out of their mind. So here's MLGO. Now with MLGO, a lot of people will try to go in at the open around $5, probably again around $8, because that's just how it all worked out. And then they got squeezed up to 15. If they didn't have a max loss, they lost buku bucks. Now, why did people go in on that? Well, if you look on the daily chart, you'll see there were some resistances. We're talking about this 30 million resistance here, which started as low as $4.30 and went as high as $6.50. If they shorted anywhere in that small range, thinking that this 30 million is going to hold up, it didn't. They actually got squeezed double that amount. I hope they got out, because if we go back to that day, just the pre-market volume for that day already exceeded that resistance. It was 33 million pre-market volume, which puts it at an estimate of over 300 million volume, and people still touched it. Now, that just goes to show how little opportunity we've had in the market. That's a solid opportunity. Now, this is around the same time that you have moves in GME and the market just being weird in general. Just last week, we're talking about Friday, the overall SPY went up to 536. That is crazy. We're still aiming higher. It actually went up to 543 just today, which is crazy. Now watch out for what's happening in the overall market, because they're changing the game. They're changing the rules, and you need to be ahead of the curve. Let's talk about what happened last month. We know GME, it started to calm down. It went all the way back down to around $15, $20. Well, when it did that, things were cool. But suddenly, after 3 years of not showing up, Roaring Kitty came back on the stream. Before he came back on the stream, he showed a screenshot of his original positions. Because remember, when he first started, he only had $53,000 invested. Well, when it went up to 500, he didn't take out a single dime, but he had call options. Call options have expiration dates. So he took out his options and he bought more shares. He ended up getting 5 million shares, and that's for his long position. And for his second position, he has 120,000 call options. Using my experience with options, there is time value. Every day, he could be losing 5 to 10% of tens, even hundreds of millions of dollars. So we don't really know what his plan is, but we know that he has the wind not at his back, but coming towards him, because GME just announced a $75 million dilution. And the only reason they're doing this is because they learned. It's a fool me once, you can't fool me a second time situation. Last time there was a retail meme stock surge inside of GameStop, hedge funds lost their money. They put more pressure on GME and other meme stocks to get them out of business. At this point, we understand retail owns the stock. This is all about supporting the company. But a lot of people like to make money inside of this too. But at the end of the day, there's gonna be a higher chance you're gonna lose your money more than make money when you're a part of this movement. So here's 3 of the top manipulations that you saw during the GME movement. When it comes to the Robinhood apps, Robinhood allowed a person to sell, but they didn't allow a person to buy more. A second one is the ridiculous amount of halts. When it comes to these meme stocks, we understand they are known for the extreme volatility because the people that are in these stocks, they don't want small gains. They're in there for the long run. We're talking about the people that call themselves diamond hands. Most of the people that trade GME, they expect to lose money. But what happens is, when it comes to trading activity, a halt gives you an extra second to rethink your strategy. And normally you get anywhere from 1 to 5 halts on a normal day. Well, GME halted 35 times just last week. And when it came to the halts, a lot of people claim that the halts only happen when the stock is going up. Now, the third type of manipulation is using the media. This is the one that Roaring Kitty was accused of. We're talking about retail. They can go out there and they can make their own post, or they could probably even hire a person and say something good about me, create my personal brand and boost it. The hedge funds do that on a larger scale, and they do it frequently, and they do it with the networks that are trusted. So if what he was doing was manipulation, they're definitely causing manipulation. So at the end of the day, it's a draw. So the next best thing is headline manipulation. We're talking about, you go on news networks like Jim Cramer, and you'll be like, hey, I think GME is overinflated and it needs to come down. It's gonna come down because of my 20 years as a hedge fund person and even more time as a newscaster. I think this is going to go down. Well, that's actually a clear sign that people are going to fight against that. They're all rebellious in nature, and that's why they pump the stock. But what if that was actually all a part of the plan for the short seller or for GME? They hired that person to talk about the stock, to bring attention to the media, to make the retail mad, and they'll start pumping the stock. And then people will start shorting the stock again. That's another form of market manipulation. All right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button. I'll see you in the next video. Peace. Say bye.